Let's continue with the updated flashcards for the year 2020. We're continuing with question number 251. What is a mortgage? A mortgage is a legal document that connects a promissory note with the collateral used to secure the note. Question 252. A deed is a legal instrument that conveys title to real property. Question 253. An amortization schedule is a table providing the periodic payments needed to pay off a loan by the end of its term. The payments include principal and interest. Question 254. Qualified mortgages may not have back-end DTI exceeding 43%. Question 255. What is a note? A note is a legal document that obligates a borrower to repay a loan. It specifies the terms by which the repayment will occur. It may also be called a promissory note. Question 256. VA underwriters use a debt ratio of, that's 41%. VA only considers the back-end debt ratio. Question 257. Discount points are paid to the lender at closing to reduce the note rate of the loan. Question 258. Securitization is used to pool similar types of loans to create mortgage-backed securities for sale on the financial market. These securities are used to create a renewable source of funds for lenders. Securitization. When does dry settlement occur? Dry settlement occurs when the parties meet to execute the documents, but the funds are not disbursed at the time. When does wet settlement occur? Just the opposite of the dry settlement is when the parties meet to execute the documents and the funds are subsequently disbursed. Question 261. Name 4 involuntary liens that could be filed on a property. We have tax liens, mechanic liens, judgments, and attachments. Question 262. What type of lien is a voluntary lien on property? A mortgage is a voluntary lien. Question 263. What is the definition of real property? Land and anything that is permanently affixed to the land. That is the definition of real property. Question 264. Tom Brown is a nurse at the local hospital. He has worked the night shift for 3 years and plans to continue the schedule. His base pay is $29.50 per hour with a 5% shift differential. He averages 35 hours per week. What is his qualifying income? Here are the calculations. Calculate the shift differential first. 29.50 times the 5% equals 1.475. So he gets an additional $1.475 per hour. So the 1.475 plus the $29.50 he gets is $30.975. So his $30.975 times the 35 hours a week that he works times 52 weeks divided by 12 gives his monthly income at $4,697.87. Question 265. If the purchase price is $300,000 and the loan amount is $250,000 and the appraisal value is $275,000, what is the LTV, the loan to value? The loan to value is 90%. It's the $250,000 divided by the $275,000. Question 266. Suppose the payment is late on a conventional loan and the monthly principal is $1,000. The monthly interest is $500. The monthly taxes are $125 and the monthly insurance is $25. What is the amount of the late payment? The answer is $75. $1,500 times 5%. Remember, you can't calculate the late charges on the taxes and the insurance. Just the P and the I, principal and interest. Question 267. Suppose the payment is late on an FHA loan and the monthly principal is $1,500. The monthly interest is $150. The monthly taxes are $105. The MIP is $210, and the monthly insurance is $33. What is the amount of the late payment? That answer is $66. The $1,500 plus the $150 times 4%. Still can't calculate on the principal and interest, only on the tax and the insurance. Question 268. Monthly PITI payments are $1,400 and the borrower's gross monthly income is $5,000. His other debts are $200 a month. What is a housing expense ratio? That will be 28%. $1,400 divided by the $5,000. They're not calculating the other debt on the back end. This is just a housing expense ratio, the front end. Question 269. The PITI payments are $1,400 and the borrower's gross monthly income is $5,000. His other debts are $200 a month. What is the debt to income ratio? That would be 32%. At this time, they are considering all of the back end of debt. $1,400 plus the $200 divided by the $5,000 gives you the back end DTI, or the total obligations ratio, TOR. They call it both things, so you'll know that on the exam. Question 270. What type of property is not covered by RESPA rules and regulations? That would be all cash sales, rental units of more than 4, property acres of 25, meaning acres of property that's 25 acres or more, and commercial property. So let me just do that again. All cash sales, rental units of more than 4, property 25 acres or more, and commercial property. I want to make sure you get that. Question 271. According to RESPA, Section 6, a servicer must make contact with a borrower after how many days of a missed payment? According to RESPA, it is now 36 days. Question 272. A lender/servicer must inform the borrower of the available loss mitigation options how many days after a missed payment? That will be 45 days. It used to be 30, but now it's 45 days. Question 273. Which regulation allows the borrower to sue for treble damages. That would be RESPA, Section 9. It has to do with title. Question 274. What law requires the lender to provide an annual summary of the activity associated with the borrower's impound account? That would be RESPA, Section 10. Section 10 of RESPA deals with escrow and escrow accounts. Question 275. The service and transfer statement must be provided to the borrower how many days prior to transfer? That answer is 15 days. Question 276. What are the 6 items that make a complete application? Those items are the borrower name, even if there are multiple borrowers, Social Security number for each borrower, the subject property address, the borrower's monthly income, the estimated value amount, and the loan amount. Question 277. The know before you owe disclosure must be provided within how many days of a complete application? That must be provided within 3 days. Know before you owe. Question 278. The know before you owe disclosure must be provided for what type of transactions? That is provided for purchase only. There is no rescission time allowed on purchases. So the know before you owe puts the buyers on notice. Question 279. If the application is withdrawn within the first how many days, or the lender declines the application with the first how many days, the lender is not required to provide what to the borrowers? That will be 3 and 3, and they are not required to provide the initial disclosure. The borrower changes his mind within 3 days, or the loan gets denied within 3 days. They do not have to get the initial disclosures. Question 280. What occurs if the lender chooses a hazard insurance company when the borrower allows the policy to lapse? Forced place insurance occurs. Question 281. Which items have a zero tolerance between the loan estimate and the closing disclosure? The real estate transfer taxes, loan origination fees, interest rates, appraisal and credit report fees have zero tolerance from the loan estimate to the CD, closing disclosure. Question 282. Which items have a 10% tolerance between the loan estimate and the closing disclosure? That would be the government recording fees and title insurance. Question 283. On what document would you find information regarding the rate lock? That information regarding the rate lock is found only on the loan estimate. Question 284. What is the penalty for violating RESPA? That would be $10,000 and or up to 1 year in jail. RESPA is the only law that carries a jail sentence with it. $10,000 and up to 1 year in jail for violating RESPA. Question 285. Which regulation is Regulation Z? That would be Truth in Lending Act, or TILA. We have a lot of fun in our office with that. TILA, the Godzilla. That'll help you remember that when you're in there taking that exam. It's one of the largest laws that we have. TILA, Truth in Lending Act. TILA, the Godzilla. Question 286. Which disclosure requires that entities that purchase or acquire mortgage loans to notify the borrower and provide the name, address, and telephone number of the new owner within 30 days of acquisition? That would be called the transfer of ownership disclosure. Question 287. The total interest being charged on the loan, expressed as a percentage, is known as the... That will be the TIP, total interest percentage. It is different from the APR, total interest percentage. Question 288. If a borrower was not properly notified of his or her right to rescind, how long can the rescission period be extended? That could be extended up to 3 years if the borrowers were not properly notified of the rescission. Question 289. How many copies of the right to rescind must each borrower receive? Each borrower must receive 2 copies of the rescission document. Question 290. What law requires that the borrower receive the right to rescission notice? Right of rescission notice. That will be TILA, Regulation Z. Question 291. What does APOR stand for? APOR is the average prime offer rate. Typically the rate at the time that you're looking for it, the daily rate, constantly changing. Question 292. When is a loan considered a Section 32 high cost loan? A loan will be considered a high cost loan, Section 32, if its APR exceeds the APOR by more than 6.5% for the first lien loan, or 8.5% for a subordination loan, or when the total points and fees payable in conjunction with the loan exceed 5%, or 8% for loans of $20,000 or less. Look at those and get in your head the larger numbers. The larger numbers constitute the high cost Section 32 loans. Question 293. When is a loan considered a Section 35 high-priced loan? A loan will be considered a high-priced loan, Section 35 loan, if its APR exceeds the APOR by more than 1.5%, 2.5% for jumbo first lien loans, and 3.5% for subordinate loans. Section 35 loans are the high price loans with the lower numbers. Question 295. What type of loans require an impound account? This is question 294. That will be the Section 35 high-priced loans. They can require up to 5 years. Question 295. When is the child booklet required? When the consumer receives an adjustable rate mortgage. Question 296. What is the regulation/rule that states that a loan originator cannot receive dual compensation? That is called the Loan Originator Compensation Rule. Question 297. Which law states that a loan originator can only be paid a commission by one source, either the borrower or the lender, but not both? Again, that is the loan originator compensation rule. You see, they can ask the questions in many different ways, but if you understand what they're asking you, you still will know what the answer is going to be. Loan originator compensation rule. Question 298. If a lender issues a qualified mortgage, it is assumed that the borrower has satisfied what rule? The ability to repay rule, ATR. Now you have to do calculations to make sure that your borrower can afford the mortgage that they're going into. The reason we crashed in the first place is because we didn't have a rule such as the ATR in place back in 2007, 2008. Question 299. What is the max debt to income ratio allowed for a mortgage to be considered a qualified mortgage? That is 43%. Question 300. What is the max term length allowed for a mortgage to be considered a qualified mortgage? That is 30 years. That's the maximum term, 30 years. That's it for this section, guys. We'll continue with the next section.